everyone. Welcome to our 20th session of Raise Your Coffee Mugs. Our speaker for today, his name is Mr. Alvin Azares. He's our senior accountant from Dallah Holding Media. And today, he will talk about Life Begins at 40, Money Talks.
Are you someone in 40s whose life becomes better? Maybe because of the skills, experience, and means necessary for an enjoyable life. This middle age is really a landmark or milestone, enough to enjoy our life to the fullest. Well, I'm not 40. I'm just 20 with 20 years of experience. In this stage, while your income is growing, your cost of living is also increasing because of the responsibilities we have. Like we OFW or expat here in Qatar, we have families, extended families, we have relatives who are depending on us. But at 40, set your limits. Being generous is not bad, but always think of your financial health. So here are the 9 financial things that you should have or you should prepare before you reach the age of 40. Number 1 on the list is passive income. What is a passive income? Before we discuss, I want you to know that there are 2 types of income. One is active and the other one is passive. So let us concentrate on the passive income. Passive income, these are investments that you earn when you do not work, meaning while you were sleeping or out for travel, you will earn or your money works for you. The second, income earned from assets, investments, or both. So what are the source of passive income? Number 1 is rental income. This rental income means any payment you receive for the use of property. This is usually tangible properties. So we have house for rent, condominium, apartment, or flat for rent. We have room as part of our house that is rent out to others. So you will receive a rental income. Another example is car. You can rent it out as a source of rental income. Car for rent, van for hire, or truck for hire. So you have this. Another is if you have equipment or farm equipment, so you can use this as a source of rental income. Sometimes, as a joke, your body, so it's a different thing. So you can, your body for rent, so it's a different thing. Another source of passive income is dividend income. What is a dividend income? These are profits distributed by the company to their stockholders or stakeholders. Stockholder, if this is a corporation, stakeholder, if this is a cooperative. So generally, if you invest in a company, you were given a certain share. And then when there is a dividend declaration, so you will share in the profits of the company. So this is a very good investment on our part. The third source of income is passive income. It's interest income. This is money earned by individual or company for lending their funds. So I believe you are very much familiar with this. You have savings account in the bank which earn interest. So as a tip, if the money you invested or put in the bank will be untouched for a certain period of time, per se 90 days, 180 days, 360 days, so better to invest this in a time deposit account which will earn a higher interest compared to normal or savings account. The fourth source of passive income is a capital gains. These are profit from the sale of property or an investment. For example, you purchase a land or a house 5 years back, and now you want to sell. The difference of the price and the cost is your capital gains. Or for example, if you are trading in a stock exchange, For example, the value of one share is 100. And then after 2 days, it became 120. So you will have a capital gains only once you sell the stock. So if you did not sell the stock, you don't have yet capital gains. The moment you sell the stock and you earn 20, that is the capital gains. Number 4 is royalties. These are compensation for the use of property, usually copyrighted works, patented inventions, intellectual properties. So if you are a writer and your books are, distributed in the market, you will be receiving royalties. The number 6 is the pensions. These are income received regularly once you have retired. So meaning continuously for your pension retirement plan, try to maximize it so that you will have a generous income once you retire. It says, if you don't find a way to make money while you sleep, you work until you die. Of course, we will not work for life, right? So we will retire. Your body will not fit to work. So if you have a passive income, then you will earn at least while you are not working. The moment you make passive income and portfolio income a part of your life will change. Those words will become flash. That's true. So how will you calculate your financial life stage? So your monthly passive income over monthly expenses equals financial life stage. So if you have, for example, your monthly passive income is 50,000 and your monthly expenses is 100,000, it means that you have 50% financial life stage. So once you get 100%, meaning you are financially retired, which means also that enough passive income to cover your monthly expenses. So this is what we are aiming for. So the greater than 100%, much better. So aside from this financial retirement, actually there are 3 types of retirement. One is the nominal retirement, which means or based on age. So when you reach 60, you will retire. So that is nominal retirement. The second is financial retirement. So this is based on money. So once you get 100%, you can retire because enough passive income will cover your monthly expenses. The third one, which is much better, productive and meaningful retirement. Having enough passive income, but still choosing to work because you want to be productive. You want to help society and you want to have a meaningful life. So meaning the third one is you have worked at least 100% or more and then you are still working. At 40 years old, you should have at least 40 to 60%. Meaning to say, if your expenses is 10,000, you should have at least 4,000 to 6,000 passive income. So start a simple lifestyle so that you can enjoy your life when you retire. No matter how good you are in your profession, never forget to save and invest. So, do you have passive income? Next thing or next financial thing that you must have is the positive cash flow from active income. So what is a cash flow? A cash flow is the in and out of the money. So it should be positive. What is positive? Meaning in less out is positive. So we will be discussing what is active income. Before we discuss already the passive income, now we will be discussing active income. Active income derived from labor or work. So this is what we're doing now. So this is active income. We are receiving our salary. Primary income, main source of income, such as salaries. Another thing is additional income, income from sideline, overtime pay, part-time. Remember that your active income can cover all regular and scheduled expenses. If this happens, it means that you have a positive cash flow. What about if you have an excess money after covering these regular and scheduled expenses? So the other thing to do, excess is used for investment. What about if it is negative? So you have a negative cash outflow. Address spending problem. So there is a problem with your spending. So you can see the number 5, 15, 20, 60. So don't think that this is a sale in blue where you can find items 5, 15, 20, 60. No. This is to address you have a spending problem. Follow 5, 15, 20, 60 budgeting rule. This means that you should have a budgeting discipline. As you can see on the graph, for the budgeting rule, blue for insurance, orange for savings, investment 20 is gray, and yellow 60% for expenses. We go to 5% for insurance. The question is, why do I need to allocate or spend 5% of my salary to insurance? It's because you need to protect your most precious asset, and that is you. Especially if you are only the one working or breadwinner in the family. The budgeted amount for the premium is enough to buy term insurance and health insurance. The next is 15%, which go to savings. 15% savings from your salary is recommended. It's better if you will open an account where you will put your budget for your savings and insurance. Your objective here is to save at least equivalent to 6 months of your salary or 9 months worth of your expenses for your emergency savings fund. Actually, some are calling this as buffer fund. Okay? We have a different definition of emergency, but here we give the meaning of emergency between life and death situation. You will only use these savings if really needed. The next is 20%, which is for investment. If you have loans, better if you will limit your monthly amortization or installment payment to 20% only of your gross salary. If you are paying more than this, you are borrowing more than your capacity. If you see yourself in this kind of situation, you have to stop getting loans and try to negotiate on the terms and conditions of your existing loans. You need to control your personal financial challenges. Make sure that the money you loan will be used to generate additional income. You will ask me, what about if I am a debt-free or no loans, no liabilities? Meaning, you are in a better financial position. Meaning, you have disposable income or investment which will generate a passive income. I already discussed this investment that will give you a passive income, but always remember that you have to learn first or invest in yourself to be a financial literate before you invest, as investment is always associated with risk. The next, so first we have 5%, then 15, so 20, plus 20, 40. So the remaining 60% will go to your expenses. So you know already what needs for your expenses some months. So this should be the 60% of your salary. The 60% budget should be enough for your expenses. It's time to check your lifestyle. If you are exceeding this budget and neglecting the supposed to be budget for savings and insurance. Always value your personal finances, which will prioritize your insurance and savings. Just follow this budgeting rule and you will succeed your financial goals. The third thing you should have is the net worth. What is the net worth? So now we will go to basic accounting. Assets is equal to your liabilities and net worth. So when you have asset, it means this came from liabilities and net worth. So there is a balance sheet here. So this is on the left side, we have the assets, and on the right side, you have the liabilities and net worth. For example, you have a cash of 300, your car value is 1,100, and your house value is 3,000. So meaning to say you have a 4.4 or 4,400 value of assets. The right side, you have liabilities. For example, you have credit card 100, car loan 700, house, see, your car is 1.1, but you have a liability of still of 700. You have a house 3,000, but it is mortgage and the value is outstanding is 2.5 or 2,500. So your total liabilities is 3.3, right? Then your net worth should be 4.4, 4,400 less 3,300. So your net worth is 1,100. So the net worth, according to them, should be 3 years worth of your current income. So let's say your current income monthly is 50 times 36. This is 3 years, 12 times 3. So your net worth should be 1,800. But here in our presentation, your net worth is only 1,100. So meaning you are left behind, right? So you have to catch up. The biggest difference between money and time. You always know how much money you have, but you never know how much time you have. So when building wealth, time is your friend. So for those attendees here that if you are in the 20s, 30s, you have still time. Number 4 is the retirement fund. So you should have retirement fund at the age of 40. So retirement is the longest holiday in your life. But when you sustain, start planning now. So it is related to what I discussed to you about having pension. So usually the states have a pension plan, right? For example, in US it's a 401k. In Philippines, we have social security system. So at age of 40, you have to maximize your contribution so that you will benefit when you reach the retirement age. Imagine this lockdown period as your retirement days. So imagine, this is your retirement days, lockdown period. No work, no pay. Your income stops, but your expenses continue. That's correct. If you fail to prepare now, you would probably suffer in the future, asking others for support that you should be responsible of. Next, financial thing that you should have is there should be no consumer debt. As advice, always pay credit card in full. Because once you pay the credit card only on the limit, for example, you will see on your statement 5%, you can pay 5% of the total outstanding. You will see yourself later on that your balance is not actually decreasing. Why? The 5% that you will pay will go first to the finance charge or interest. Then after that, that's the time only it will hit your principal. So imagine if you are paying 5% and the 2% went to or will go to finance charges or interest. So 100% divided by 3 is 33. Imagine you will be paying 33 months to finish your credit card balance. what if every day you are consuming so much that should that be for emergency, vacation, celebration, speculative investing? What is speculative investing? If someone is asking you to invest, but you notice that the rate of return is too much or too good to be true, so think about it first. It may be scam or, because as a rule of thumb, a normal company is only earning 20% net. So if you divide this by 12, it's almost something 2% should be only in a month per month. So if they are saying, I will give you 10% per month, so that is not true, actually. Debt kills our personal finance, it is a silent killer. So debt should be used only for higher profit than interest. If will provide more efficiency and productivity, and will be used only for debt consolidation. What is debt consolidation? If you have a lot of debts from different institution or person, you will have a debt to consolidate so that you can manage your payment. The next thing that you must have is emergency savings. It is said that 9 months worth of expenses or 6 months of your salary. Actually, you should have started already having emergency fund. How can you save if you can keep on spending more? So you have to pay yourself first. On savings, do not save what is left after spending, but spend what is left after saving. So the formula here is salary less savings equals expenses. So in our presentation, from your salary, we deduct first the insurance, the savings, the investment. After that is the expenses. This is the application on savings. Money speaks one language. If you save me today, I will save you tomorrow. Think about this. This is very true. This money serves, this emergency savings fund serves as your safety net when you have a sudden job loss or you got stuck in an unexpected situation like this pandemic situation. So in this two things that we have learned about money in this pandemic situation. Number one, emergency fund is essential. Number two, jobs are not permanent. So that is the essence or the importance of having emergency savings fund. Remember this, your parents are not your emergency funds. Your children are not your retirement funds. Saving money is being responsible. So number 7 thing or financial thing that you should have by the time you reach 40 years old is adequate insurance. Health insurance for all, term insurance for those with dependents. An apple a day keeps the doctor away. This is just one of the sayings that we grow up with that put emphasis on health. It only shows that health is one of our major priorities. So if you go back, 5% should be insurance as per our budgeting rule. Protect your savings or investment from life's uncertainties. This is whether you get life insurance, health insurance, or not, someone will be paying during your sickness, accident, disability. The question is, who's going to pay? It's your family or you or the insurance company. This is another bad truth. People decline insurance because they are healthy. So you will say this if you are in the 20s, 30s, but if you are already in the 40s, 50s, it is the reality. Insurance decline people because they are sick. Or if you are in the early stage, the premium of the insurance is much, much cheaper when you will get the insurance if you are in the 40s or in the 50s.
Life insurance is like a parachute. If you don't have it the first time you need it, there is no second chance. So true, there is no take two. Next, home ownership. So everybody is aiming, right? It's our goal to have a house because this is our, it's our one of our needs of as well as with our family. So home ownership is also you are feel secured when you have your own house. So the basic rule is the amount of your house maximum of 3 times annual income. So if you are earning 50, as example before, so times 36, so the value of your house should be only 1,800. And another thing, 20 years maximum mortgage. So if will be loaned through a bank, set a limit of up to 20 years only. Then you should have at least 20% a down payment. So if you don't have 20%, forget about it first. So you have to manage yourself, train yourself on a savings so that once you have the 20%, you can start having a home loan, something like that, housing loan. Number 9 on the bucket list, on the financial thing is the bucket list fund. So we don't need to be serious every time, right? So it's time to invest to save so that you will live your life to the fullest. Okay. Invest earlier and use those earnings to fund your travels. What good money in the bank if you haven't lived a fulfilling life? Set aside a money to enjoy your life, draft a bucket list, and work on making those events happen. Once you have this bucket list, this will be your inspiration, motivation to save and invest. Because, for example, you invested and there is a passive income. This passive income you will use for your travels, for your vacation. So you are getting inspired, you are getting motivated. So wants are not bad. For example, travels are not bad. They make life a little bit happier, easier, more convenient, and more colorful. So what are your bucket list? Me, if you ask me, of course, number 1 is travel. So after having said these 9 must have, once you reach 40, if you are below 40, 20, 30s, still you have time to accumulate wealth so that you have like this. But for us who are 40 and above, it's not too late. We can still cover up to have this before we retire. So let us plan ahead. Planning is bringing the future in the present so that you can do something about it now. So that's true. Your future is created by what you do today, not tomorrow. And the last thing I will share to you from Bill Gates, if you are born poor, it's not your fault. But if you die poor, it's your mistake. So that's why we have these, tips so that we can reach our financial freedom. That's all. Thank you.
It's much.
Alvin, thank you so much. Thank you so much for that. It serves as a reminder,
Mhm.
Yes.
because sometimes we just spend whatever we don't have, and
We are
that present
neglecting that,
is
yeah.
a good, yes, it's a good reminder. If I may add, this is
Yeah,
personal.
sure.
Maybe for me, maybe you can take it from the bucket list, or maybe you can reduce some of that 5, 50, and 60, 10% from whatever you have. Try to give it back. At least for me, that's what I do. 10% of whatever I get, no matter how difficult life seems to be, give it back. Give it to the less fortunate, give it to charity, give it to church, whoever you feel comfortable with, and it always come back. It will always come back.
Yeah, that's true.
That's for me.
Actually, I'm practicing also that, but because we have a different beliefs, culture. So the best thing is to set aside at least 10%, and then you recalculate.
Yes.
Agree, 100% agree.
We would like to have more finance presentations also. Maybe Nancy, Cecile.
Yeah. It's very important, especially when you project it to personal life. It's very important because, like what Alvin said and Cecile commented, it's a reminder. So it's very important for everyone, especially in situations like what we are facing now, the world in general. It's very important to have a plan for, I will not say black days, gray days.
Rainy days.
Yes.
Yeah. Rainy days.